Hey everybody, it's Ryan from Tepidino Insurance here today to talk to you guys a little bit about understanding your rates on your home and your car insurance, even your business insurance, really, pretty much any kind of insurance. Over the last couple of weeks, spring's coming. Usually this is when the time people start thinking they start their businesses, so they start getting their insurances and premiums and policies start to renew. And people start looking at their rates, and they wonder why. One of the biggest questions we get in the office is why are my rates so high, or why is my rate high regarding certain different things, right? So some of the factors that determine your rating or how much you're going to pay have to do with geographic location. When you're talking about car insurance, where you live, where you drive, where what your driving history is, where you work, stuff like that. All those types of different things determine your rating factor, okay? Something that not a lot of people consider is where you live, okay? Now, over where we are here in New Jersey, Atlantic City is not too far away. Some people might work in Jersey City, Philadelphia, stuff like that. The word city on the end of your town could have an adverse effect on how much your premium is. Why is that? Okay, well, if you live in North Jersey and you have Jersey City and New York City's right there, okay. Now, obviously, Jersey City is a pretty good size place, but it's not nearly as big as New York, or not nearly as congested as New York, right? Now, down in South Jersey, you have Atlantic City, and anybody who lives in, around, or works in Atlantic City knows that Atlantic City is not a city in the same respect as New York and Jersey City, or even Philadelphia for that matter. But just because the word city's there, the ratings are higher. The reason being is that insurance companies look at that, the word, and they classify it with New York and Jersey City and Philadelphia size cities, even if you're on the West Coast, Los Angeles, stuff like that. They identify it as being a more congested area, a higher population density, and stuff like that, okay? So, again, why does that mean to you? Well, basically, if you're in a more congested area or a higher population area, you have more chances for accidents to happen, right, or losses. Now, for the purpose of auto insurance, like if you had I use Atlantic City as an example here. Like if you lived in Atlantic City, you worked in Atlantic City, and you drove a car and everything was in Atlantic City, your rate might be $1,800. Now, the same person decides to pick up their family and move them out of Atlantic City, say into Egg Harbor Township, Mays Landing, or something like that. You're looking at a rate reduction just based on your address. You could be $100, you could be $50, you could be $200, depending on, what characteristics your policy has on it. It could be a completely different rating. It could save you hundreds of dollars. And there's no real way to figure it out unless you go to try and change your address. When it comes to business insurance, again, geographic location has a lot to do with it. But really, what really determines a lot of your rating and premium price is how much business you do, okay? So, for instance, a guy that's starting off a business in a coastal area anticipates doing about $150,000 in sales a year. His premium's going to be lower than the guy in the same area who's doing $300,000 or $400,000 a year. The reason and why, they're selling the same kind of store, same size, same products, everything's the same, just sales are different, right? Well, the reason being is the more sales you have, the more people are going through your store, the more risk you have that somebody could get hurt, okay, or there could be a loss in the store. So, again, the more you do business, the more things are going to cost, But in the same respect, you would assume that if you're doing more business, you can afford the higher premium that's going to come down the line. Now, obviously, everybody's goal when starting a business is to make money, not lose or hemorrhage money to bills and expenses. So having the right kind of insurance or the right coverage at an affordable price is really what you got to look for. And hopefully most agents will do that kind of thing for you. I know the agents that are in my office do that sort of thing all the time. We do our best to get you a good price at a low rate because obviously you want to make money, we want you as a customer, and we want to keep you for a long period of time. So now, one thing that really that people don't really understand, again, is that geographic location. Well, why is it more expensive if in one town versus another town? Again, a lot of it has to do with potential losses in the industry. You have to remember, in the insurance industry, everybody kind of all the carriers kind of share bits of information with each other on policies. You know, and they don't share your personal information. What they do is they share like loss information, stuff like that. Some you may hear the term a clue report or a clue. They got to run a clue on a property or something like that. Well, basically what that is the insurance companies all kind of pool their data together to find out if there were losses on a property or in a location, right? So just for argument's sake, we're talking about Sandy, okay? And in Union Beach, New Jersey, they took a beating. You know, I mean, they really got hit bad up there. And so if you're trying to insure a home in Union Beach, you know, one, there's probably no standard market companies there, although I have a couple standard market companies that will definitely write in that area. But they rates the companies that are writing up there will hit you with a higher premium because that's a higher area for loss. Okay, it's a higher risk area is what they call it. Meanwhile, if you go 2 towns over to Homedale or Middletown, like inland portions of Middletown, not the coastal stuff, those areas didn't take a lot of losses. Although they're on that borderline area, they didn't take a lot of losses, so their rates will be a little bit better than where you are in Union Beach, Kingsburg, Keyport, stuff like that. You know, what is it up there, Belford or something like that. Meanwhile, if you're inland in the New Brunswick area, you know, you had less damage from Sandy. You know, you had some more wind and more rain stuff, but you didn't have the flooding. You didn't have that kind of stuff there. So these are things that adversely affect your premium when it comes to insurance. Your location, you know, obviously a house on the water is going to be a much higher premium than a house that's, you know, 10 blocks in. Okay, I mean, they're still both going to be pretty high because you have coastal exposure, but the house on the water is going to be a lot more expensive. Okay, now the geographic locations also have a adverse effect on the types of insurance that you can get or you're going to be required to get if you have a mortgage on a property. Okay, for instance, if you live in say you're in North Jersey, you live in Union Beach, Keyport, Kingsburg, Cliffwood Beach, Belford, Highlands, stuff like that. Monmouth Beach, you're going to need to have flood insurance. Almost guarantee you that any mortgage company that you have is going to require flood insurance on the property. Why? Well, because there's a risk of flooding. You live on the coast. You just got to have to do it. There's no ifs, ands, or buts about it. Now, after Sandy, you started seeing a lot of homes being lifted. You're starting to see premiums increase because of the losses that were taken. They obviously had to raise their premiums to recoup some of the losses. But, you know, there are things that you can do if you do live in those coastal areas to kind of mitigate or limit the amount of exposure you have. Obviously, you can lift the house. You can do all kinds of different things. But all those things cost money. There was, down in South Jersey, there was basically a running thing here that if you didn't raise your house, you didn't spend, you know, $60,000 to $80,000 to lift your house, you were going to be spending $6,000 to $7,000 a year on your flood insurance, depending on where your home was. So, you know, you're going to pay $6,000 to $7,000 for 10 years. That's the cost of lifting the house, right? So it's almost as if you had a lot of incentive to lift your house and make your home safer, so to speak. Okay, now flood insurance is one of those types of things that there's just starting to become more options available to people. Up until I think maybe a year or two ago, the only thing you had available was a FEMA policy. Now there are surplus policies or non-standard market policies that are much more affordable and some of them offer better coverages than the FEMA policies, but there are some caveats to it. If you're not sure, if you want to find out more information, feel free to message me or give me a call in my office, and I'm happy to go over these things with you if you live in a coastal area. And you know, sometimes you can't even get the surplus policy. I mean, I recently had a customer of mine who was able to get a FEMA policy, or had to get a FEMA policy. Hey, Lori, how are you? That had a FEMA policy, and we were able to quote a much cheaper price with the surplus policy. Unfortunately, the bank that they have their property with would not accept a surplus policy. They just hadn't. It wasn't that it wasn't any better or any worse. It's just that they just did not have provisions in the contract for their customers to be able to use or purchase surplus policies for flood insurance. So, I mean, we could have saved. I could have saved her probably about $3,000 a year, but unfortunately, the mortgage company said no, they can't do it this year, so they're gonna have to wait until next year. Now, with your car, back to the car insurance part of things, if you have a car that, or you live in an area that has flooding potential, obviously your car insurance, you always probably want to have comprehensive on there. Now, that's something that's going to adversely affect your premium, okay? Especially if you own the car and you don't have any payments on it. A lot of people like to say, oh, I'm going to cancel my full coverage. Well, if you live in a coastal area, keep the comprehensive on there. I don't care how much you think the car is worth. Comprehensive coverage allows you to put in a claim if your car gets flooded out, catches on fire, a tree falls on it. It happens. But, I would definitely keep that on there, and it's pennies on the dollar for that coverage. We just recently had a new employee in our office, and we were going over some differences, and I was showing her the differences between with comp and without comp, the differences between a $100 deductible and a $500 deductible, and, she didn't really realize that, the premium difference was only about $30 a year. So for $30 a year, why not have or present the better coverages to the client, And these are all things that your agent, like I said, I always say this, if you're not sure about your insurance, ask your agent. If your agent can't answer the questions for you, let me know. Message me, give me a call. If I'm too busy, which I'm hardly ever too busy to help talk to somebody about their insurance, I'm happy to refer you over to one of the people in my office that can help you out just as well as I could, okay? But anyway, hopefully this helped everybody understand a little bit about differences on their car insurance policy or their homeowner's insurance policy and why where you live has an effect on how much you're paying. If you have any questions, definitely message me on the system here, inbox me, send me a text, call me on my cell phone, call me in the office, whatever you may want to do. My office number is 609-910-0193, and shoot me an email, whatever you want to do. I'm happy to look over information for you guys and do quotes for you and do whatever I can to help save anybody money. All right? Take care, everybody. Have a great weekend, and stay safe.